Cuban. And what I would say with Robinhood is they should have more capital requirements or more requirements for disclosure and transparency. Either they need to have more capital reserves or they need to tell their retail investors what they're going to do. And then on short selling, we need to have, again, higher capital requirements for getting loans for short selling and have the uptick rule, which was in place from 1938 to 2007 that basically put restrictions on short selling. Reinstate that. There was no reason that should have been removed.
Now, there's more that's come out about exactly why Robinhood did what it did, and you're talking about liquidity here. What do you think the retail investor in this environment deserves, whether it's in terms of the information that they have access to, the protections around trading? I mean, being able to trade on margin, trade options, under what circumstances, et cetera?
Well, they first deserve transparency. I mean, Robinhood didn't have terms of service that said you can trade unless a stock gets too hot, in which case we're not going to be able to cover the capital requirements of clearinghouses. So they need to have transparency. I think if you have higher capital requirements, you would force the model of a Robinhood to be able to trade. And then they need to have symmetry. I think if retail investors aren't being able to trade, you shouldn't be allowed to have hedge funds trade, which have higher collateral often. So there needs to be more independent looking at what symmetry would entail for retail investors and hedge funds.
Congressman, it's Deirdre. Yeah, transparency has been a big topic, whether Robinhood users or customers or the product. I take your point there. I wonder, though, how much is Robinhood itself at fault here? You said you take a look at them and other platforms, but are some of the other platforms, better because they rely on a different business model? They don't earn revenue through payment for order flow?
Well, I think the biggest thing Robinhood has been at fault in is a lack of clear honesty. I mean, I saw the CEO on television. He said it's not a liquidity event. And then he said, well, what he meant is it's not a future liquidity event. So they're parsing language. They're not being honest. They should just come out and say, as Cuban was pointing out, they didn't have the money to cover these trades and they need to revise their business model. The second thing is that the clearinghouses may be at fault, and we need to look at where the clearinghouses are. The clearinghouses have a relationship with the hedge funds. Robinhood obviously sells data to the hedge funds. So the whole thing needs to be looked at is whether there's a level playing field or whether institutional investors have advantages over retail investors, and how do we level that playing field?
Right. Sells data to the market makers. Congressman, why did it take this moment, the extraordinary events of the last week or so, to look into how Robinhood is regulated or not regulated, how those stand? Do you think that this will be sort of a moment that regulators look into other fintech companies, many of which have been expanding their financial services, to faster rate than potentially banks in some cases, and have reached far higher valuations than traditional banks?
It's a funny thing how politics works and public opinion works. Often it takes a galvanizing moment that captures people's imagination and emotions. And here, people are used to hedge funds making tons of money. They're used to folks going on television and talking down stocks and trying to legally manipulate, but nonetheless manipulate the market. And finally, you see folks beat the hedge funds at their own game. And right when they're winning, they are not able to continue trading. And something about that just struck people as fundamentally unfair. It exposed how broken the system is. And that's why I think the whole system is going to be looked at, and we may see finally the reforms that we need.
Congressman, we did a bit earlier this morning about the percentage of stocks that are owned by high net worth individuals in this country, and what a challenge it's been for decades to get more Americans invested. I mean, really invested in the market. I wonder if you think this whole phenomenon and episode is going to make that more challenging long term.
Well, thanks for raising that, because people forget that 50% of the country isn't in the stock market. Most of the assets are held by the top 10 or 15%. So one of the things we have to do is think whether we have an over-financialization of the economy. How are we going to get more productive investments into advanced manufacturing, into things that are actually going to create good-paying jobs and not just speculation? Now, I don't think that the market is totally divorced from fundamentals. I mean, I represent a district with Apple computers, and people are placing a bet on the future digitization of the economy. You can question whether that's right, but I don't think fundamentals have no place in these bets. But I do think that there is an element of speculation that has obscured the fundamentals and that has made the economy work for very few while not having wages rise.
Shepard Smith here. Thanks for watching CNBC on YouTube.